I do still think we could go test one more time the high here, get up to about 25,500. But I have to be honest, I still have a downside ultimate target of 12 to 13,000 on Bitcoin.
Hello and welcome to the Daily Crypto. We have Gareth Soloway with us today and he's going to share his trading plan with us. You don't want to miss out on this video because he makes some very high probability predictions that might help you in recovering some of your losses.
Yeah, so I think the bond market is always the truth teller, right? I mean, the Fed has said many things over their long career of kind of managing the monetary system. And for the most part, they're not really right that often. So I think the bond market is dead on here. I think you have to look at, the GDP numbers. You have to look at the economic slowdown that you're seeing. Corporate earnings have come out recently, and we're seeing a lot of companies saying things are slowing down. They're lowering guidance. And the Fed is sitting there and they're saying, hey, listen, the jobs numbers are good, so we're not in a recession. And I mean, this is what drives me nuts is that everyone knows that jobs are a lagging indicator. So, whatever jobs numbers are now, in 3 months, it will reflect today's action or what the economy is showing today. So I'm not sure why they're doing that. If they're, they've got to know it's a lagging indicator. Maybe they just don't want to admit defeat and say, hey, we're going into a recession. I think also part of it is that we know we have high inflation. If they throw in the towel and say they're throwing in the towel, then you're going to see the markets get very tumultuous and very possibly inflation won't come down as much as if they kind of say they're going to still be hard nosed. So, I mean, it's a mess of a situation. I don't know if there's any easy way to get out of it for the Federal Reserve, but certainly I agree with the bond market. I think we're heading into a recession by later this year, and the Fed only has a little bit more rate hike to go before they're going to have to stop.
The Fed claims we're not in a recession because the jobs number is still high. However, Gareth makes a very valid point by saying that jobs are a lagging indicator and they don't represent what's happening in real time. With negative bond yields, it is clear we're already in a recession.
Yeah, so one of the interesting things is I went bearish on the dollar right up here recently over the last, this is the monthly chart, so this is actually last month, and you could see the reasons why. And you guys know I'm a pure technical trader, so it told me that the dollar was going to pull back, which interestingly enough meant the stock market should rally. And again, a dollar pullback means the Fed is going to be less hawkish, less apt to raise interest rates. So all those things came to fruition. And what's fascinating about the dollar chart is the dollar chart was telling you that was going to happen. It told you ahead of time that the Fed was going to back off because it was into resistance. And what happens when you hit resistance? You pull back. And so I think people have to understand that the dollar is made up of there's many currencies out there. There's the yen, there's the euro, there's the dollar, there's other currencies. And the dollar strength doesn't necessarily tell you that the dollar is invincible. It still tells you that we're the biggest and the best on the block. So, the European Central Bank, they've been printing, the Japanese Central Bank, they've been printing, China's printing like crazy, and we are too. So when you have everyone printing, then the dollar still maintains its superiority as a safe haven asset. And we know that from the past 20, 50 years, when there's fear about a bad recession, a war in the Ukraine, all these things, it tends to drive money into the dollar. So I think that's the key here is understanding that when it's kind of like the best on a bad block type scenario, but that's why the dollar has been stronger for people going into safety from other currencies as well as safety against recession and so forth.
Gareth already predicted that the dollar is going to drop in some of our previous videos, and it played out exactly as he said it would. The dollar indicated that the stock markets will rise as soon as it starts to drop, which is why we have seen a strong surge in all financial markets recently.
Yeah, so there's no denying that this looks like a bearish channel again. So I do still think there could be a little bit of upside. I'm surprised, honestly, that Bitcoin hasn't shown more strength. And the reason why, you might say, well, why does Bitcoin need to show strength? Well, it doesn't need to. But the bottom line is when you have a stock market rallying, it's telling you that there's risk on. And generally, Bitcoin 2 times does that risk minimum, maybe 3 times. So if like the NASDAQ goes up 2%, oftentimes you'll see Bitcoin up 4 or 6 or 8%. You haven't seen that here. And that has to be something that you pay attention to, because I think what's going on here is that, so Bitcoin has floated up, but you're not seeing the same bang for your buck as the technology stocks because of Voyager, Celsius. I mean, there's definitely this fear amongst average investors that got burned, that their money got locked up in some of these fiascos. And so I think you're seeing less interest as a risk asset of going back in. Now, again, I think it's important to recognize that the longer term pattern here is bearish. I do still think we could go test one more time the high here, get up to about 25,500. But I have to be honest, I still have a downside ultimate target of 12 to 13,000 on Bitcoin. So I do think there's another leg lower. You can almost see the writing on the wall now, because if let's just say the NASDAQ starts to really tank again, and it's already like, I mean, we're seeing the NASDAQ's like 20% off of its lows, or 15%. So, I mean, imagine the NASDAQ just drops 20% back to its recent lows. You can't tell me that Bitcoin's not going to at least break the low here and head lower.
Statistically speaking, Bitcoin hasn't had a comparable run to the NASDAQ because there is a lot of fear in the market after what happened with Celsius and Voyager. Gareth still believes that Bitcoin is going to 12K, and if the NASDAQ retests its recent lows by dropping 20%, there's no reason why Bitcoin can't drop another 40 to 50%.
And really, if you're talking, the low I think was 17,600 or whatever it was. I mean, really at that point, you're not that far away from 12 to 13,000. So I do think you have more downside, unfortunately. I love Bitcoin long term. I think it's exactly what the world needs, but it has to get this flush out. You haven't seen enough retail investors get freaked out to the point where they actually start talking about it not being worthless, like we saw in 2018 before the 2019-20 started to move up and 21 run up. So I think that also has to happen. And I still think you have to make a lot of these other coins go to zero. Not necessarily the top 20, 30 coins, but there's so many junk coins out there. If you look at the .com era, there was a major flush out and the best survived. And that's actually the healthiest thing for it to happen. So I think, again, you know, on a technical basis, I've calculated it out. 12, 13,000 will be an interesting target. I'm hopeful that's the low. I'm going to start accumulating as we get below here, you know, back into the teens for a longer term kind of hodl position.
He still believes in Bitcoin in the long term, but he thinks a final flush out is necessary, just like the .com bubble, where only the best companies survived. Gareth says that we will see thousands of cryptocurrencies go to zero, which will ultimately benefit the crypto space.
Yeah, I mean, so this is where it gets really tricky, right? Is that as much as I think it's going to 12 or 13, you know, at this point, if you've ridden it down from 65 or 69, the question is it worth dumping some of that position and trying to buy lower? It's hard for me to give advice on that because it's such a tricky thing. I wouldn't want it to hit 15,000 and then start its next bull run and then people miss out on it. What I like to do is basically I would just say, if you're still in it and you've ridden it down, I don't know if I'd take the risk of exiting if it, you know, at these levels. I mean, even, you know, if you think about from 69 to 22 where it is, that amount of drop, I mean, if I'm saying it's going to go to 12, it's only another $10,000. It's the equivalent of from 65 going to 55. It's not that big of a move. So just so everyone knows what I'm looking to do, basically below 20, at 19, I put 1/6 of what I want to own as a hodl position in Bitcoin into a portfolio, right? And basically every 2,000 to 3,000 down, I'm going to add another 1/6. So I'll have 2/6, 3/6, 4/6, 5/6 of a position, and then finally a full position at 6/6. If it gets below 10,000, that would be my last add right there. So I would say to people, I mean, you got to choose what you're most comfortable with. But my recommendation is at this stage, just dollar cost average at this point down. Just do it slowly so you can space out your buys. And then eventually I do believe that you see 100,000 on it, maybe 500, even 1 million down the road.
It's not worth it to cut your holdings to buy back lower because we already have dropped so much. However, what the retail investors can do is to dollar cost average and gradually add more as the price keeps dipping. Even though Gareth is a swing trader, he has started to build a long-term position in Bitcoin and will continue to buy more as the price keeps dropping. In a few months or years, the price difference will not even matter because Bitcoin is likely to soar to new highs which we can't even fathom. Are you going to DCA if Bitcoin drops lower or just continue to hold your previous position? Support us by liking the video and subscribing to our channel. Stay tuned for new videos.